Hello guys, welcome to our course of integrated skills course in investing into global financial markets. My name is Andres Uruena. I'm the head of financial market research for Direct Trading Technologies UK and the Latin division. And it's going to be my really pleasure to be here with you guys for the next following week, teaching you guys all of the basic concepts and all of the most important knowledge that you guys should get in order to start investing into the financial markets. Before we start, because I've also have been a student in the past, it's really a little bit frustrating for students participating in classes when the teacher is just talking and talking and talking and talking. And that's why in my classes, I try to be as much as interactive as I can. I will be asking you guys a lot of questions so we can keep the class a little bit interactive as much as we can. Before we start looking into our syllabus of today's first class, I would like to know a little bit more about you guys. I can see that most of you guys are pretty much new into the information regarding investing in the global financial markets. So before we start with the first topic, I would like to ask you guys, because I know that not all of you might have some experience into the financial markets, but let me ask you this. When somebody says to you, financial markets or global financial markets, what's the first thing that comes into your minds? When somebody speaks to you about financial markets, what's the first thing that you guys think about? When I ask you these questions, you can type into the chat. So I'm watching it. So we can keep our interaction via chat or in the Q&A if you like to keep your questions private. There is no problem about it. But let's reply this first question, guys. When somebody asks you about the global financial markets, what's the first thing that comes into your minds? Don't be shy. Put your questions, your replies into the chat. You can put it private, so only I can see it. If by any chance you don't want them, your other students seeing your replies, don't worry about it. But yes, let's keep our interaction into the chat when I ask you the question, guys. So please don't be shy. I'm asking you guys once again. When somebody asks you or somebody mention you something about the global financial markets, what's the first thing that comes into your minds? Investing in stocks, maybe cryptos. What's the first thing that you can think of when somebody asks you about global financial markets? Okay, now I'm seeing some of your replies. I tell you guys, don't be shy. We're here to learn. Yes, correct. Stock investing, stocks mostly, yes. This is one of the 4 asset classes that we have in the global financial markets. Okay, I've seen a wonderful reply. Any market where the trading of securities occur, including stock market. That is correct. The stock market is one of the 4 asset classes that we are going to be looking at the moment that we invest in the financial markets. And yes, when we speak about global financial markets, the first thing that comes into your minds might be stocks. But there are other asset classes. Some of you guys are also mentioning. We also have cryptocurrencies, which is the newest market, and we will be speaking a little bit more about in detail of both the crypto and all of the other asset classes that we have. So perfect. That is what I wanted to look at. Okay, guys, starting into our class on today's class, I can tell you from this moment that today's class, because it's our first class, of course that we have to cover the theory, the most important and most basic concepts regarding all of the information that we're going to be looking at the next following days. Every class that we have today, that information is going to be important for tomorrow's class, and tomorrow's class information is going to be important for Tuesday's class. So of course that we will have to cover the theoretic concepts, and this is only going to be on today's class. In the next following classes, it's going to be more interactive because I'm going to teach you guys how to download the platform, and we're going to analyze and we're going to test the market so we can place trades together on real life time. Okay. That being said, like I told you, today is going to be an introductory class, a lot of information, theory concepts. So let's get started to not waste any more time. Okay, on the pre-test introduction into the financial markets, you guys have to understand what is the concept of the global financial markets. That's why I started the class with that first question. The global financial markets are marketplaces when we trade on a daily basis, different type of asset classes. We're going to check all this information of the 4 asset classes that are available to invest in the financial markets. So let's get ahead and look this information. Before going to the historical view of the emergence of the global financial markets, let's state the 4 asset classes that we have. The first one is the equity markets, in which we have, of course, the stock markets is included into the equity markets because it's not just stocks. We have indexes, we have all kinds of products that are included into the stock markets. Next, we have also the currencies markets that you guys will see in the next following minutes and the next following days, the importance of the currency markets and how does that impact the global financial markets, and how can we see trade in the currencies markets on a daily basis as well. And lastly, we also have the cryptocurrencies markets, which is the newest one. It's a market that it's still pretty much new, even though the first crypto was created like 11 years ago, more than 11 years ago, which is Bitcoin. But it's still only 12 years of existence. It's a pretty new market. But at this moment, it's one of the most volatile markets. And you guys are going to understand why the reason of the cryptocurrencies being so volatile as they are. Okay, so speaking about the historical view of the importance into the financial markets, we have to understand, oh yes, my apologies, I just forgot to show you guys the images of every type of the asset classes. At this moment, when we speak about in the asset classes, we speak about stocks. This is a very important information that you guys can look. This is called the Bloomberg platform. This is the platform that all of the hedge funds, all of the central banks, all of the major companies use to analyze the market, the pre-market and also the aftermarket. And this is the platform that is being used for professional investors, for institutional investors as well. Also, we have, like I was showing you guys, the currencies markets. The currencies markets is one of the asset classes that has the biggest transaction volume, and you guys are going to see why. And this is why it's really important to know everything about the currencies markets. The commodities markets, the asset class of commodities. We use commodity to trade between countries, and it has been one of the oldest methods of transactions between different economies, between different countries, and between different continents of different regions. Every region of the world is being rich on specific commodities, and that's how the country's economy work on a daily basis by making trade of different type of products. Sometimes you exchange products, or the most of the time you buy and sell different type of products. So X country sells its product to Y country, and those countries have to pay that exchange of that transaction, and they have to make the conversion of the currencies. So that's why we can complete all of the transactions. It's pretty basic information, but this information is actually really important on you guys to how to understand the globally of the financial markets, and also the different type of asset classes that we will be looking at the moment of your decision to how to invest. And like I was saying also, again, the cryptocurrencies, which is the newest one, led by the Bitcoin, which is the actual cryptocurrencies that has the biggest market value with also the highest price. And you guys will be knowing, or you guys are going to understand how the price of the Bitcoin can come from 50K to 40K in just a matter of hours, and sometimes even minutes. Okay, so moving on the historical view of the emergence of the global financial markets, we have to understand one thing. the financial markets are divided into just two groups. These two groups, depending on what type of investor you are, you're going to be classified in each of these two groups. The first group is the financial markets it's owned, or the financial markets has 80% of the market cap. It's being controlled or not controlled, or is being traded by central banks and hedge funds, because these are the biggest institutions who place the bigger transactions. And these transactions can have the power of actually moving the direction of the different, it can move the differentiation, the price movement of the charts. It can change the price. It can change the direction of the price movement into the charts, because the transactions of the central banks, the hedge funds, they're so big. That's why 80% of the financial markets are being traded by this type of institutions, which are the institutional investors. The 20% remaining of the financial markets, it's being owned by the retail traders, such as you and such as me. Why are we called retail traders? Because we as an individuals, our investment accounts are not going to be that big as the central banks at the hedge funds. So that's why our transactions does not have the capacity to change the direction of the market. But we can take advantage of the positions being made by the central banks and the hedge fund institutions, so we can actually try to replicate their investments, so for a personal profit. That's why the financial markets are moved 80% by central banks, because the size of those transactions are so big that it's never going to be compared of the size of our transactions as retail traders. So that's why the retail, the 20%, we are aiming to speculate of the positions being made by the biggest institutions, so we can do the same as them. And if they do profit, we're also going to try to duplicate those transactions, so we can get a profit for personal accounts as well. Also, the central banks. The function of the central banks, you can see it right here. It's important to say that not all of the countries in the world, they have a central bank. There are several countries that they use other countries' currencies, such as me at this moment. We in the Latin division, we are located in Panama. Panama uses the same currency as the United States. So that's why Panama does not have a central bank. Panama has to do what the central bank of the US does, because we depend on that currency, because Panama does not own a currency itself. So the functions of central bank, the most important function of the central bank is to issue money, because we need to have cash in our economy. Everybody needs to use cash. It's really common now that in the 21st century, everything is a little bit more digital, is really more digital. We can use credit cards, we can use online payments, but still it's really important for the country to have cash, because that is the basis of the indicators of the actual economy. All the functions of the central banks are monetary policies, which is specifically to set interest rates. To attract foreign investments, central banks decide to increase or decrease the interest rates, so in order to attract investments from the outside of the country. This is one of the most important indicators of every currency of every country, that every single month the central banks, they change the interest rates so they can keep the market attractive. You have to either increase the interest rate a little bit, or you even have to decrease the interest for the following month. This thing, because it's done by every single month on a monthly basis, give us, both institutional investors and also retail investors, the opportunity to see this type of information presented by the central banks, so we can actually place our transactions according of the transactions being made by the central bank. Also, the central banks have to ensure the stability of the banking system, lender of last resort commercial banks, lender of last resort of government. So the central bank and also the hedge funds, the investment banks, like I said, these are the type of institutions that, I don't want to say that they have control of the financial markets, but their transactions can determine the future price movement of any specific asset class. Is that understood? Do you guys have any question at this moment of the function of central banks or institutional investors? Okay, so we move forward. Now, investment banks, which is also included in the 80% along the central banks, these investment banks, what they do is that they're not commercial. This is not specifically a place that you open a savings account and you're going to get an interest, a very low interest for having your money in that savings account. These type of institutions, they are dedicated to raise money from its clients, from its investors, and make that money to create companies, to inject capital in different companies, to get to invest in the different asset classes. So as you guys can see this list, this is a little bit from a few years ago, but as we speak, the world's largest investment banks are the following. JP Morgan, I think that you can probably have heard a few of these ones. JP Morgan, Bank of America, Merrill Lynch, Goldman Sachs is one of the biggest ones as well. Morgan Stanley, Citigroup, Deutsche Bank, Credit Suisse, Barclays, Wells Fargo, and UBS. If you guys can see some detail about this, is that a few of them, there are being created a long time ago, with Barclays being one of the oldest ones of the 1600s, and some of them of the 1800s. But if you see a key detail of who are or where located the world's largest investment banks, you guys can see that pretty much more than half of them are located into the US, or they were founded in the US. Also, you guys are going to see a very specific reason why is this. So I'm going to give you guys a little bit more focus on these classes so you guys can see, because one key detail of one information is going to be a result of the other information that I'm going to be giving you guys as we continue this class. So yes, the 80% of the financial markets is being controlled or is being managed by the central banks and the world's largest investment banks. Like I was telling you guys, the other 20% are we, the retail traders, because we are individuals. We do not control the money from somebody else. We control our own personal account. And our personal accounts are never going to be compared with the size of the accounts that has the hedge funds and also the investment banks and also the central banks. Now, going over on the function of the importance of the global financial markets as well. Why is it important? Why the financial markets are important? And you don't actually need to invest in an exchange. You don't need to go to a securities house to make investments. The financial markets, the global financial markets, because it's included with 4 different asset classes, we can do this on a daily basis. Let's say, for example, that some of you guys are located in Dubai. Let's say that you guys, for example, you guys go to a holiday, let's say to the UK, or let's say to Spain, to a different country. If you guys go from the Middle East, if you guys go to a different region or to a different country, and you guys go to Spain, you have to exchange your own currency. You have to exchange dirhams in a house of exchange so you can receive the local currency. This is a portion of the currencies markets because we do this type of trades on a daily basis. Central banks, they have to do currencies transactions every single day because they have to do trade with different countries, and with different products, my apologies. And you have to pay from your local currency, you have to exchange that, so you can pay to your supplier in their local currency. That's why the currencies markets is the biggest market in the world. It has an average transaction volume of $5 trillion on a daily basis. This is the biggest because it's not included just by investing into stocks. You can use currencies markets as a personal individual. If you guys go to a holiday to a different country, different companies from different parts of the world, they're doing exchange of the products. You have to pay in different currencies. So that's why the currencies market is the biggest one. And that's why the importance of the global financial markets are, even though when I ask the question, what do you guys think of global financial markets? 90% of you guys reply to me regarding specifically on stock trading, which is actually really good because that is actually correct. But we have to be aware that there are different asset classes. And with these asset classes, you guys can see the transactions on a single day basis. Is that understood, guys? Do you guys have any questions at this moment? Anything that might not maybe clear? Please don't be shy. If you have any questions, please text it into the chat. Or if you want to have a direct question with me, you can put it into the Q&A. I'm constantly watching at the chat and looking at all of your feedback. So if something is not clear for you guys, please let me know and I will be more than happy to explain you one more time. Now, also the importance, now specifically talking about the stock market, which is one of the asset classes. Why is important the stock market? The stock market decided, or a company, when a company is actually doing good, but they want to raise more capital so they can keep expanding worldwide, and you fulfill certain requirements, you can choose to go public. When you go public, it means that your company is not going to be owned by a certain individual. Now that company is going to attract public investors. It can be hedge funds, it can be central banks, it can be investment banks, or it can also be retail traders such as you and such as me. When companies go public, they need a specific place depending on their location. They need a specific place where they can go actually and trade the equity of the company. When you guys, I show you the largest investment banks, you guys saw that pretty much 65, 70% of those banks are located into the US. Why is that? Because in the stock market, specifically in the asset class of the stock market, the biggest one, it's located in the United States. So all of the countries rely on a little bit on the United States economy. That's why they are a powerhouse. And also because the New York Stock Exchange is the biggest exchange in the world. Now, it doesn't necessarily mean that if you're not offering your company, if you do not go public into New York, that doesn't mean that your company is not big. Sometimes other companies that are really huge, they are located or they go public into the different exchanges in the different locations in the world. But yes, it's pretty common that the most important companies, they are located into the United States. And you guys can see this. The 10 largest stock exchanges in the world. The first one is the New York Stock Exchange, which is called the NYSE. We also have the NASDAQ. The NASDAQ is also into the New York. So we have the two biggest exchanges, they're located in the United States. And as you can see, if we actually try to measure this market cap, you guys can see that this is some percentages. So we also have the next one, which is the biggest one, is the London Stock Exchange. That personally, for me, the hedge funds that work in the London, they're located in London, they have the biggest opportunities when placing investments into different regions, and I'm going to explain to you guys a little bit later. You guys are going to see why. So if you guys see, the New York Stock Exchange is the big one with 30% of the market cap, then followed by the NASDAQ, which has 12% of the market cap. So almost half, which is almost 42% of all of the companies in the world, they are located into the New York Stock Exchange and also in the NASDAQ. So if you see, the next biggest one is the London one, Tokyo one, which is the Nikkei 225, the Shanghai Stock Exchange, the Euronext, the Hong Kong, Shenzhen, and etc. So why is the importance of the exchanges? The exchanges are the place when you buy and sell different type of companies, different type of stocks. But the exchanges were created so they could actually regulate the market. In every type of asset classes, we should have or a regulated entity. All the countries in the world that they have a stock exchange, they will also have a regulator. So this is the importance of these stock exchanges. Even though the system is not perfect, and we can see a lot of information regarding that, without these stock exchanges and without the regulators, the stock exchange market or the equity market, this specific type of product, this specific type of asset class will not be as successful as it is. Because when an asset class is not regulated, it's going to be relying on market manipulation. Market manipulation, it's illegal. And this is why we need regulators, so they can prevent different type of individuals or different type of companies to create market manipulation for their own personal gain and make a huge loss to the other side of the part of those transactions. So that's why the importance inside of the stock exchange markets, that every stock exchange is going to have its own regulator. Some regulators are bigger than the others, but it's really important that if you guys are making investments, you guys have to know this type of information. I think that you guys might heard about the SEC, which is the SEC of the United States, which is the regulator of the New York Stock Exchange and both the NASDAQ as well. This regulator is the biggest entity regulator in the world, but they regulate only the business that is being made into the United States. The London Stock Exchange is regulated by the FCA, which is the Financial Conduct Authority from the UK. And moving on, every stock market, they have to rely on a regulated entity. If you're making business in a stock exchange, which might not be big, you're going to expose yourself that it's going to have also a weak regulator, and they can be, probably it can happen market manipulation in such places. Okay, now moving on. This is one of the key aspects that is included, or it's also a different type of asset class of the financial markets, the derivatives of the financial markets. In this specific type of product, we're going to see the following. The derivatives of the financial markets, it's where the future market was created. The future market can be used for different type of asset classes. It can be used for stocks. It can be used for crypto as well, but it's very risky. But it was created specifically, the future market was created mostly to help out the commodities market. Why is this? Because the commodity markets, some of them are raw products that they have an expiration date, such as the wheat, the coffee, the corn. These type of commodities, they have an expiration date because they are natural products. The commodities such as gold, such as natural gas, such as precious metals are a little bit different, even though you can do future contracts on them. But it was more focused also to help the agriculture sector, because the agriculture is really important in all the countries in the world, because like I said at the beginning, depending on the region that the country is located, it's going to be richer in commodities than other countries. And the countries do that to do export and import of those commodities so they can do trade, and you can have a successful economy for each country. So every piece of products, it's going to be important. Every piece of different type of asset classes is going to be important. But the future contracts were created specifically to help this aspect of the commodities market. With this example, can tell you guys very easily. My apologies. Okay, let's say in this example, the corn. In this type of products, and you guys will be able to see it, really easy examples. You can look at them in your own countries. When the farmers, they start to harvest, in this case, the corn, there is a risk at the moment of you do your harvest. You guys have environmental risk. You guys have market risk, because you can have a dry of several months and it can destroy all your harvest on any given time of the country. So it's going to be difficult for farmers to be able to secure the product before they are actually producing it. So that's why the future contracts got involved. Let's say that a trader, or let's say that a supermarket or bigger institution contacts the farmer to actually acquire or buy the product. Because that product is not even made yet, they're going to lock in the price for the future. So the farmer is going to start to harvest the corn from the foreseen next 6 months, let's say, for example. So it's going to take 6 months for that corn to be ready, but that corn is already sold in a price that was locked in at the beginning of the conversations with the other party. So let's say in these examples that the quantity is 4,000 bushels and the price was fixed at 450. Okay, so the good thing and the bad thing is that it's a little bit risky, but it helps you to secure a price into the future. Let's say, for example, that the farmer agreed to sell its 4,000 bushels for the price of 450 each one. And the delivery date is this one, that it was the 7/11 of 2010, let's say, for example. So when at the moment of the delivery comes, he already agreed that the price was going to be 450 a bushel. But let's say that the market conditions change during those during those 6 months of the production was ready. Let's say, for example, that now the bushel price went from 450, and because the market can change very easily in the foreseen future, at the moment of the delivery, the price was not 450, but it was $10 a bushel. So the farmer actually lost the opportunity to sell those 4,000 bushels at $10 a bushel because he already agreed to sell them at 450. For the counterparty, they are actually really happy because there is risk involved for both of the parties. So in this case, they won because they agreed for the price of 450 a bushel, and at the moment of the delivery, the bushel price skyrocketed to $10 each bushel. So it was a profitable move for the counterparty who actually bought the product from the farmer. It can also happen in the opposite way. When they agreed into a price, let's say that they agreed to the price at 450 a bushel, but at the moment of the delivery, there was a lot of supply, so the demand lowered. So the demand of the actual corn went down. So the price dropped from 450 a bushel and it dropped to $2 a bushel. So the farmer in this case, they had the good hand in this one, because at the moment of the delivery, the bushel price went down from 450 to $2. So now the loss is going to be on the counterparty. It's actually not going to be a loss itself, but this is the function of the future markets. So you guys can lock in the price because the market conditions can change, but at least you're locking in the price. It can be risky because at the delivery time, you could be benefited, or at the delivery time, you could be affected in a negative way. But this is really important. It doesn't happen like this way, the extreme way that I just explained to you. But I use these numbers so you guys could actually understand how are the definition or the key concepts of how it works. The price movements are not that big, but this is how actually the future markets behaves. Do you guys have any questions at this moment? Is everything clear so far? You guys have been a little bit shy for the last 15 minutes. I know that I have been speaking a lot, but like I told you guys, the first class is the theory class, and I really need to cover all of these points because this information is going to be seen. We're going to apply this information into the next following days when we start to place our transactions and when we start to do technical analysis together into the financial markets. So please, guys, don't be shy. If you guys have any questions, you guys have any inquiries, please let me know via the Q&A, or you can text me into the chat. I'm actually looking at this every moment. so I'm not going to miss any one of your comments. Okay, let's go now. One of the questions which is actually really important. Just give me 1 second. No, this one is already covered. Everything clear? Okay, that's great. Now, this question is always asked. This question is really normal. What I really liked when I get this question. Well, this question was actually a part of the syllabus, but every time that I speak with clients, every time that I speak with different types of students from the Middle East, from the UK, from the Latin region, it's pretty common for people to ask me these type of questions. And I really love to explain that, because we have an extreme advantage at this moment when we are actually placed to invest in the global financial markets. Now, the question is investing in global financial markets feasible and real? The answer is a straight yes, guys. It is. It actually is. And why is that? If you guys can see, we are, sorry. The answer is a straight yes. Because of why? Because of the digital era that we live now, because of the boom of the internet. I could tell you guys that, let's say, for example, 20 years ago, we were barely entering into the internet world. There were not that much information. Well, let's say for the late 90s and the first 2000s, we didn't have that much access to information, because we were barely entering the internet era, the digital era. Nowadays, you guys can have all this information at the palm of your hand with your phones. Of course, that you guys are students mostly, so you might be in between your early 20s. It is normal for almost all of the young people, for all of the millennials, if you guys can see, or the next generations. We use our mobile devices for social media mostly, and that's fine. But you guys don't know specifically the power of the access of information that you guys have in the palm of your hands. 20 years ago, 25 years ago, retail investors had nowhere or had no idea how to get access to the information of the global financial markets, so they could be making any type of transactions. How is this? The point that I want to be clear is that because of the digital era, now there are a lot of type of companies that you can open an investment account so you can invest. You don't necessarily have to go to a central bank or a hedge fund or an investment banks, because to open an account with such type of companies, usually the minimum requirement to open an account are like $5 or $10 million, or maybe less, but that's the usual, or at least 250K. That's why the retail traders, they do not have access to open these type of portfolios, because you actually need biggest amounts of money to be able to be a client of this type of institutions. But with the digital era, there are plenty of companies, brokerage firms, brokerage companies, there are thousands of them. And you can create your own personal account so you can make your investments. That's why the retail traders. And that's why the retail traders have gone from 2%, 3%, now up to 20% because of the digital era. Because of the digital era, the access to the information, you can have access to the markets. Like I was telling you, 30 years ago, only central banks have access to investment platforms. Nowadays, everybody with a phone or everybody with a computer can have access to the real-time live markets. So that's the difference. And that's why it's real at this moment. As of 2021, it's real to invest money in the financial markets, and you can get actually a lot of profits. The other side that I was also telling you guys is that now that you guys can have easily access to the financial markets, okay, you guys have access to the financial markets, but you do not know what to do, or you don't know where to see information of what is actually happening into the different type of asset classes. Nowadays, you guys do not need stocks. As of today, October 10, 2021, you do not need a Bloomberg platform to be able to read the financial markets and to be able to understand the financial markets to make your investments. As of today, you can access this same information for free because the hedge funds, this Bloomberg platform, these two screens and this keyboard, the hedge funds, they pay a lease of $25,000 per each Bloomberg platforms. There are companies that they have like 25, 50 Bloomberg platforms. You can do the math and you can see how much money the hedge funds pay to have access to these type of platforms. Is the best one. I can assure you it's the best one. But the thing is that we guys are, as retail traders, we can have the same access. We can access the same information that we see here in the Bloomberg platform. We can do it in a web page. We can do it in your phones. I have as a financial advisor, I have my phone, my work phone, and also my personal phone. I'm registered to all of these portals of news, investing.com, Bloomberg. I'm registered to a lot of portal news that is pretty much the same information that you guys can see into the Bloomberg platform. And this is why you can say that you can be a profitable investor now in the 21st century. Because you as a retail trader, as a retail investor, you're gonna get access for free to the same type of information that the hedge funds and the central banks and the investment banks also have. Why is this? Because we can also, this is my favorite portal. It's called investing.com. It's in Spanish. Let me change it into. This is just a real example. I'm going to get a little bit more into it in the next following days when we're actually reading the financial markets. But let's say, for example, the news, the economic calendar. This economic calendar is I'm giving you advanced information at this moment. It doesn't matter. But the point that I want to make is that this same information that you guys can see here, it's going to be the same information that it's also in the Bloomberg platforms. And this is a website, it's a news website, which is actually free. It's called investing.com. It's my personal favorite one because this is the one that I have been using for the last 5 years. So that's why I wanted to reply to this question, because everybody that is new into the financial markets, they say, is this real? Can I actually make some profits? Yes. It's not going to be overnight. You guys have to study the financial markets. You guys have to study the charts. You guys have to study the news. It's not going to be overnight. Like I said, it's not going to take you 1 week or 2 weeks to be a profitable investor. It can take you a couple of months, but it can happen. I always tell my clients and my students that if you want to be a successful investor, you have to dedicate yourself and you have to study the financial markets the same way that you guys are studying your career at the university, the same way that you guys are studying your bachelor's degrees at this moment. So it's really important for you guys to understand that with the access to the information, you guys will be able to make better decisions, and those decisions will become profitable decisions for all of you guys. Okay. Do you guys have any questions? Do you guys, is something that it might not be clear at this moment for you guys? Please let me know so I can explain you guys one more time, or if everything is clear, we can continue. Now, coming into the basic concepts, now we're gonna go a little bit more into it. Well, before we go to those basic concepts, I wanna show you guys the example of why this is so important and how this can happen. This is the web page I was telling you guys. 21st century, access to the information. how can we search legit websites? Okay, this is one of them. I'm going to give you the links of the trusted ones and the ones that I actually use. You guys can see this one, the OPEC. The OPEC is the Organizations of the Petroleum Exporting Countries. The OPEC is the regulatory market of the oil market. That being said, it's pretty much obvious. But the things that I wanted to say is that for the oil market, this is the regulator. The OPEC has monthly meetings. All of the things that happen into the OPEC, you guys can see them on the website. There was that one, look, well, this one is the first technical workshop with energy companies. The thing is going to be tomorrow. This one is not that more important. This is not that important. There was another one that I wanted to show you. This one, 22nd OPEC and non-OPEC ministerial meeting. This is going to happen on November 4th. What happened in this meeting, it can change the prices or it can change the market trends of the oil, either the Brent or the WTI. When the OPEC, they do measurements of the oil market, the OPEC can say, or they can decide, actually is the most important word. The OPEC can decide if the supply should increase or should decrease to all of the oil manufacturers worldwide. So if the OPEC gives the order to decrease the production volume of oil barrels, that means because there is a very low demand. So they can actually help to not make the oil prices destabilize that quick. If we have a low demand, we're going to lower our oil product. So in this way, we can keep it stable. We can keep the price stable in order to avoid any type of crisis, that this crisis can be redeemed or can be shown as market volatility. And when there is market volatility, there can be a lot of profitable investors, or there can also be a lot of people that can actually lose money. Because sometimes we have so big of transactions being placed in this type of asset classes that if we have a lot of market volatility, it can help a lot, but it also can not help at all to the other part. So if let's say also, for example, look, and you guys can see this, OPEC daily basket price, it just went out. But there was a news that said that because of the market price, they were going to increase their oil production. So if we have a lot of demand and we do not have enough produced barrels per day with all of the oil manufacturers, they can increase the daily production to actually be able to comply with the actual demand. This is the type of information that you guys are going to have access for free. If you're going to see any information related to the oil market, you can check the OPEC.org webpage. This is the most important thing for you guys. And this is what I'm telling you, access to the information. If you want to see anything related to the oil, go visit the OPEC, because the results of the meetings of the OPEC can change the price direction of the oil price. And if you guys know that the direction is going to change, you can use that information to make your investments into the global financial markets. Do you guys understand this? You guys understood the concept, or you guys are actually seeing how you can use the information in order to make your investments? Of course, it's really the first class. I'm going to show you in the next following days when we get access to the trading platform, and you guys can actually see how to place your transactions. But the important thing at this moment is that I'm trying to show you guys that it's real, and you can see this information, and this information is going to help you to make your decisions. It's not that easy as it seems. You guys have to study, you guys have to practice, but the main point is that you guys are going to have all of the tools in order so you can succeed into the financial markets. Okay, do you guys have any questions before we continue now to start a little bit more into the financial markets terminology? Okay, everything is clear, so good. Let's move forward. Now, with the continuity with practical examples, in order for us to understand the markets, we actually need to understand some key concepts. So let's go ahead and go watch some key concepts. Oh, I show it in a different order, but I was going to show you the OPEC and my investing platform at the same time. I just did it in different order, but that has no, that's cool, that's fine, that's no problem about it. Okay, so basic terminology into the global financial markets are going to be the following, and this is going to be the place or the moment actually, but I'm going to give you guys a little bit of homework. Don't worry, it's nothing too, it's not difficult at all. I'm going to give you guys some key concepts that are going to be important, and I just want you guys to look for those definitions. It's not going to take you more than 15 minutes. It's going to be very brief, so you guys can actually start reading about the key concepts that we're going to be looking at every single day from now on until Thursday. Now, when we are in the global financial markets, there are two types of transactions. There is just two types of things that you guys can do. You either buy or you sell. Also, the terminology when you speak about specifically on stocks is that if you say that I'm going long on Apple stock, that means that if you say long, it means that it's you actually buying. If you say I'm going short with Tesla, that means that you're actually selling the Tesla stock. This is the most basic terminology. This is actually really easy, but let me text you into the chat some of the keywords that I will let you guys to go ahead and look for tomorrow's class. This one with this 5, it's okay. So these concepts that I just put you guys into the chat, I will let you guys for tomorrow's class that you guys just go ahead and look at the definition of them. It's not going to take you more than 10 minutes, and just read the first 2 descriptions of each one, so you guys can have a little bit of information of what we are going to be looking at the next following days. Okay. Now, another important aspect, it's going to be the volume, which is actually really important at the moment that you guys trade, and why each type of asset classes have its advantages. Now, I was telling you before when we were starting the class that I was also telling you the average trading volume. Why is it that the Forex market, which is also the currencies market, it's the same thing, just with 2 different type of names, but it actually means the same thing. The currencies markets, is a asset class that has the biggest trading volume on a daily basis. Why is it? I was telling you guys, because of the central banks and the hedge funds and the investment banks. They do currencies transactions on a daily basis. And when you have the biggest institutions in the world placing transactions into its actual market, it's going to give you a big trading volume. That's why the currencies markets give us a lot of opportunity, because the more trading volume that you may have, it means that the more the price is going to be fluctuating. And the more the price fluctuate, you're going to have the opportunity to try to predict the next movement or to speculate, and you can make a transaction going either long or either going short, and you will be able to make profit on such transactions, okay? That's why the currencies markets has the biggest market cap in the world. Also, when countries, I was telling you about the commodities, when different type of countries, they do trade of import and export of different type of commodities, they have to make currency exchange in order to pay the country where they're getting that commodity from. So let's say, for example, I was speaking about the corn. If the UK wants to buy 1 million bushels of corn from the United States, they have to exchange the British pound in order to get them USD so they can pay the United States in their local currency. So that's why, because central banks and different countries and different companies worldwide, when you're doing trade commerce, you have to exchange money in order so you can pay your provider into their local currency. That's why the currencies market exchange has the biggest average daily trading volume. The next one is the future markets, which is also known to have the second biggest one, because I was telling you, because of the trade of countries. A country is going to place a bigger transaction than a company that is listed in the New York Stock Exchange. So that's why all the countries in the world, they are doing trade on a daily basis. And that's why the trade of their national products is going to be based, it's going to be paid in different currencies. So that's why the future markets and the currencies markets they go by hand, they're in parallel, and one has to do a lot with the other. The equities market, which is also the stocks in the indexes that are located in the stock exchanges, is the one that has an average daily volume of $191 billion a year. I was also mentioning you guys about the newest currency, the newest asset class, which is the cryptocurrencies markets. Because it's the newest one, it's not that big, but it still has an amazing market cap of an average daily volume of $15 billion a year. And like I was telling you guys, this is just a market that was created like 12 years ago, something like that. So it has a lot of potential. But the one thing that you guys have to be really aware of the cryptocurrencies market is that the cryptos is not regulated by anyone. So that's why they are extremely volatile. And because they're not regulated by anyone, you have a big exposure of market manipulation. And it doesn't necessarily have to be lying, or it doesn't necessarily have to be in an illegal way, but the market manipulation that you guys can see in the cryptocurrencies markets is just all based on rumors, and the rumors might not be a lie, but with just rumors, you can increase or you can decrease the market cap of any of the cryptocurrencies, and not necessarily Bitcoin. I'm just going to give you guys one brief example. I think that all of you guys might know who Elon Musk is, which is the CEO of Tesla, SpaceX, one of the co-founders of PayPal, and many other companies as well. Elon Musk is one of the most important guys regarding the global financial markets. Everybody wants to do what Elon Musk does. And he is a persona that likes to be involved in the social media a lot, by either doing interviews that he should not be doing, or maybe by making some tweets or making some allegations that can be affected into the global financial markets. Specifically talking about crypto, I don't know if you guys heard of, but he made one tweet some time ago, not that much. I think it was like a couple of months ago. He tweeted, "Buy Dogecoin," which is actually a cryptocurrency that has no value, it has no purpose. But after he actually tweeted "Buy Dogecoin," the market cap of that actual crypto skyrocketed. I don't remember the exact prices, but if you had some Dogecoin before that tweet, at the moment of the tweet, for a few days, everybody is going to buy Dogecoin. And the people that already has that coin, the Dogecoin, they bought it for cheap, pretty much for nothing. After the tweet, the market went up, the market price went up, and they sell, and now you guys sell with a huge profit. That's market manipulation via rumors. And because the cryptocurrency market is not regulated by anyone, it's not actually illegal at all. So that's why everybody has to be a little bit aware of what they're actually doing with the crypto, and mostly with altcoins, because the altcoins are very unpopular, are very new. It's not going to happen, this type of market manipulation, with Bitcoin, because it's the biggest one, but it's going to be used a lot with also altcoins. Also, another example of Elon Musk, it's by the time that he was creating a company called Signal. which is going to be a new messenger communication style, which is supposed to be the new competitor of both WhatsApp, Telegram, and others. So because he was the creator of Signal, he was heavily promoting Signal. And when he started promoting Signal, he also made a tweet by Signal. The thing is that Signal is just a startup company. It's a company that it's not big enough still, or it's not big enough yet to be able to be listed in the New York Stock Exchange. So everybody saw that tweet, and everybody went into the New York Stock Exchange and both the Nasdaq looking for the company that was called Signal. Signal, the listed company that is called Signal in the New York Stock Exchange, it's a pharmaceutical company from Texas, and its founder, that he has a good proportion of his shares, the market price of that Signal company, which was not a messenger company, but it was a pharmaceutical company from Texas, if I'm not mistaken. The guy got rich overnight. He has a couple of $1 million worth in stock. After the tweet of Elon Musk that says use Signal or buy Signal, I think it was use Signal, because he tweeted buy Dogecoin, and before that he tweeted use Signal. Everybody started to buy Signal without even knowing that Signal is not a public listed company, but the Signal that they bought, it was a pharmaceutical company. That company market cap skyrocketed. The owner of the company, of course, it's his company, but the shares of the company, it increases like 6 times. So of course he sold a part of his equity of the company, and the guy is rich, is multimillionaire now. So this is one of the things that you guys have to be really aware. You guys have to be aware of information. Not all of information might come from legit websites, like somebody was asking me some moments ago. You guys have to be aware of what is actually happening into the markets. But the thing is that if you're actually looking at just into the cryptocurrencies market, I can tell you there are a lot of opportunities. In every asset classes that you invest, you're going to have opportunities to make money. That's for sure. But because of the cryptocurrencies market is still not regulated, you're going to have a big exposure of losing money if you're not aware of what is actually happening with your investments. I know people that they trade only cryptocurrencies, but this is people that they have to stay connected almost 24/7 to see what is actually happening, because just a small rumor can change the price of one of the altcoins, and it can benefit you or it can make you a big loss of your investments. So is this part clear? Do you guys understanding how this works? Do you guys understand what are the risks of trading? Well, all of the asset classes have risk, but unfortunately the cryptocurrencies has a little bit more risk than the others because it doesn't have any type of regulation. Okay, now moving forward, we have trading hours. Trading hours, it's really important because depending on the asset class that you guys are deciding to make your investments, you guys gonna have some key moments to place such transactions. Let's say, for example, the commodities markets, you're gonna have access to both gold and oil almost 24 hours a day during the week. The currencies markets, because it's the biggest one, and also the currencies markets, you can trade currencies 24 hours a day during the week from Monday to Friday. Why is that? Because the currencies markets are located with different stock exchanges. They are located with the London Stock Exchange, which is the powerhouse of the Europe session. You can also be located with the New York session, which is the king of the America session. You're also going to get access to the Tokyo, the Nikkei 225, to the Hong Kong Stock Exchange, which is the Asian session. And from the Pacific, mostly you will be connected to the Australia time zone. So because the currencies markets are listed and you can trade currencies markets with different stock exchanges, because these stock exchanges are located worldwide, every stock exchange, they work from 8 a.m. to 4 p.m. or 5 p.m. their local time zone. But because the currencies market is located to all of the exchange, that's why you're going to get access to the currencies markets 24 hours a day during the week, because you're going to be connected to the different time sessions. And when one is closed, the other one is open, and you're going to still be able to place your investments. That's from Monday to Friday. Cryptocurrencies, the actual cryptos, you can trade them 24/7. There is no closure because there is no stock exchange who actually regulates the crypto. So crypto, you can trade them 24/7. The stocks, depending on the stock that you're investing your money, you're going to have to place that investment during a specific trading hours. I was also showing you guys at the beginning that into the stock exchange market, if you're going to invest in stocks, 43% of all of the stocks in the world, they are listed into the New York Stock Exchange or the NASDAQ. So if you're going to place investments in stocks, by now, you already know that 43% of all stocks, they are listed in New York, which means that to be able to trade such stocks, you can only trade them when the New York session is open. So either is the NASDAQ or the New York Stock Exchange, the NYSE, you only be able to place transactions on such stocks during the trading hours of that session. If you want to trade Facebook, Tesla, Twitter, Apple, Netflix, all of the biggest companies, they're listed in New York. So you're going to have to place that transactions in the New York trading hours. So for example, I'm located in Panama because the summer just ended. Now I have a 1 hour difference with New York. So my local time, it's noon. It's 12:07. New York time, it's 1:07 p.m. Now, your local time zone, guys, if I'm not mistaken, it's 9 o'clock, right? So in Dubai, it's 9 o'clock because it's 9 hours ahead from my office, which is in Panama. So for you guys, it's 9 p.m. So you guys have a difference of 8 hours with New York, which means that if you're going to trade stocks that are listed in New York, you have to trade such stocks between the New York trading hours that will be something around, if I'm not wrong, 4 p.m. until midnight, your local time zone. Yeah, something like that, I think. Yes, so if you guys want to trade stocks, which you have to trade them into the New York session, your local time zone in Dubai, the only time that you guys will be able to trade stocks will be something around 4 p.m. at midnight. If you want to trade different type of asset classes, you can trade them for 24 hours a day, such as crypto, or you can trade commodities and also the currencies markets 24 hours during the week from Monday to Friday. So is this clear? Do you guys have any questions on the stock exchanges or the trading hours? All good? Perfect. Now, one important aspect of the global financial markets is that we as retail traders, like I was telling you, we have access now to information. You can access the internet. You can register with a brokerage company, and you can open your investment account with an online brokerage company, and you can do it from your home. You can open your account. You can verify yourself. You can send the money to open that trading account, and that's it. Now you have to be really aware. We have to be really careful. Why is this? Because this is the downside of the access of the information. Now, because everybody can have access to the markets and to the financial markets information, there are also now there are thousands of brokerage companies. So now you guys have to be really aware with that. Why is that? Because now everybody over 18 years old can open an investment account, a trading account with an online brokerage company. You have to be really aware of the company that you are opening your account with. You have to check the company's trajectory. You have to check the company's regulations. 80% of the companies, they just have one regulation, which is an offshore regulation. So at the moment that you open your account with a brokerage company, please make sure that that is a company that has established trajectory and is a company that is well regulated. Like I was telling you, depending on the company's location, it's going to be regulated by its local regulator of the stock exchange. The SEC, which I was telling you, the SEC is the Securities and Exchange Commission, is the regulator of the United States markets. It's a company, the regulator entity that regulates all of the firms that are located in the US, that they make transactions with the New York Stock Exchange. And they only regulate the US market, but the SEC is the biggest regulatory entity in the world. Now, for online trading brokerage companies such as us and a lot of more companies, we're not being regulated by the SEC because we don't have offices in the United States. Now, the next one, which is the biggest one, is the Financial Conduct Authority. Remember that when I show you guys that where are the biggest stock exchange? The first one is the NYSE with 30 something percent, then the NASDAQ with 14%, which combined was like 44% of the market cap in the entire world. And I was telling you that 40% of the stocks, they're listed in New York. But after the United States one, the next one, the biggest exchange that was followed was the London Stock Exchange. And the London Stock Exchange is being regulated by the FCA, which is the Financial Conduct Authority from the UK, which means that the FCA is the second biggest regulator in the entire world. And we are actually proud to say that we are a regulated company by the FCA. Now, you can see this. This is our company's website. Our biggest regulation, it's the UK one, and this is our register number. So I go to the FCA, Financial Conduct Authority, to check the regulation, firm, search, and this is it, Direct Trading Technologies UK. We are a regulated firm by the FCA, which means that this is going to give you guys the most security that you guys are actually working with established trajectory and a company that is well regulated. This is what you guys have to always look at. If you're going to make business with a brokerage company, please check the company's trajectory and the company's regulations, because this is the downside of the access of the digital era and the 21st century, the access of the information. There are a lot of companies that they are not regulated and they give you a lot of good promotions. And at the end of the day, a lot of people, they have not much knowledge of the financial markets. They open a company with a brokerage firm, which is located who knows where, with no regulations, and you can get scammed very easily. So this is why you have to be really aware that if you're going to do business, do it in the correct way and do it with a company that has a good trajectory and a company that is actually regulated. And this is the second most important regulation in the entire world. And the last one, well, not the last one, it's another regulated entity, which is called the ASIC. This is the regulator of Australia. This regulation has been gaining power, the Australian Securities Investment Commissions. This is the other regulation that has been gaining some trajectory. It's a regulation that is getting a good reputation because it's becoming a good one. We don't need it because we don't have offices in Australia, and we already have offices in the UK, and we are already regulated by the second biggest regulator entity in the world. So this is the importance for you guys to know that you should be looking at information of the company that you guys are going to be doing business with, because we're not going to be playing around. We're going to be studying the financial markets with real micro prices. You guys are going to get access to real-time financial markets information. So This is not something that you guys should be doing with a company that has not a trajectory, or a company that has no regulations. So this is the point that I wanted to have to explain you guys the supervisory bodies or supervisory regulatory bodies in the global financial markets and their importance. So we just have 15 minutes left. Tomorrow's class, we're gonna start it, and I'm gonna leave it for tomorrow. As soon as we start the class, I'm going to show you guys how to download the trading platform that we're gonna be doing, that we're gonna be using. Like I was telling you, today's class was going to be the only one in which we were going to see a lot of theory. Now from tomorrow, I still have to give you a little bit of theory so you guys can know how the financial markets work. But from tomorrow's class, we're going to be using the investment platform. We're going to be connected to the real life markets, and we're going to continue to do so until the end of our last class, which is going to be on Thursday. So thank you very much, guys, for your participation in today's class. Remember, don't be shy. You can text me into the Q&A. You can text me into the chat. I will be more than happy to assist you with all of your questions. I actually enjoy doing this a lot. You guys, well, all of you guys, the other classes, I always get a good feedback. The people are really happy with the classes that we're doing, and they're actually getting to know how to invest into the financial markets. So this is the main goal, for you guys to learn the integrated skill course, so you guys can learn the basic concepts and the most important concepts that you should know as a beginners in order to succeed or to start your journey into the financial markets. So once again, guys, thank you very much for your participation. It has been my really pleasure, and we will see each other tomorrow at the same time, and we will continue with a bit of theory, but from tomorrow till the end, we're going to be straight on into the financial markets. Thank you once again, guys, and have a wonderful night. I will see each other, guys, tomorrow at the same time. Have a wonderful night. Bye-bye.